Good morning, good afternoon, good night, wherever you're tuned in from. Welcome to the BitLab Academy daily live stream. My name is Kellam, and welcome to the show. I had a little bit of some technical issues on my side with my streaming software, so let me know in chat. Give me a 1 if all audio, visual, everything sounds good. I was having some funkiness when I was sharing my chart, so if you see the thing switch there, then I might have to do something to adjust that. But hey, we're here on the fly. We're adaptable. We're in crypto. That's I mean, if you're not adaptable in crypto, then I don't know how you're surviving, because that's the nature of this market, is remaining adaptable, seeing what's going on with the markets on a daily basis, and being able to have a strategy in place and be able to pivot when you need to. So I'm going to go ahead and make sure all of my settings are good here. It looks like everything's flowing well. So again, welcome to the daily show. 10 a.m. Eastern Daylight Time, I guess, EDT, every day of the week, Monday through Friday. And then I'm basically working in, be doing some Saturday streams now. So fill out that poll. Let me know what time you prefer, if we should just keep the standard 10 a.m. Saturday as well, or if it's a later time. I'll look at that. I remember I did the poll yesterday. I didn't close it out. So before we get started, make sure you hit that like button, you hit that subscribe button, you ding that bell, join our community here. We're bridging that gap from beginner to pro. Whether you're a beginner in this space or you've been in for many months or many years, I guarantee you're going to learn something here on this channel, because we don't just do TA and throw out targets for you. We break down the concepts to show you exactly how you can understand what's going on, from basic concepts to advanced strategies. So with that being said, let me come over here to my page. Let's make sure everything's working here. Yeah, okay, looks like it is working. So make sure you come over here, follow at Academy BitLab, which is our Twitter handle here. Make sure you're following the correct page. There's a lot of scammers out there. I just want to make sure you're all protected. And come down here, and I have the tweet pinned in the top, and the top pinned comment. Make sure you come to this tweet from today. Retweet this out to your community. By retweeting this, not only are you helping this community grow and the crypto ecosystem grow, you're helping spread education, as well as being entered to win a number of pretty great things. So you see what I mean? I don't know why my chart is doing that. Well, we're going to kind of come back to that. So looking here, I just want to say there's a lot of stuff going on in the markets right now. There's, of course, some questions about, are we going to have a 2019 bear market cycle? Are we going to have a 2015, sorry, not bear market. Are we going to have a 2019 bull market cycle? Giant push up before pre-halving? Are we going to have a breakdown? Are we going to have a consolidation period? Sorry, I got a lot of things going on my screens right now. Are we going to have a consolidation period where stuff goes sideways a lot like it did in 2015? Man, I hope I don't have these. I hope this screen stuff doesn't. Let me just check something really quick. Everybody, while I'm adjusting this, make sure get in chat. Let us know what you're thinking. Are you bullish? Are you bearish? Are you just sitting on your hands? I called that out in the pre-show right before we went live. But I'm curious what you're doing with the markets right now with your assets. Let me know there. Let me go to a range. Everything looks fine. I don't know why it's switching back and forth. But if we're gonna have issues, we're gonna have them together, because we're a family. So let's go ahead and jump over to the screen. Okay. Now, looking at this, we can see the 2015. I'm going to turn my face off here. Look at just at the chart. This is a 2015 cycle. You see where we have this accumulation period, and then we push up. And this is the question here. Are we going to have this push up and then a sideways consolidation here, or are we going to have something similar to 2019 where we have this strong push up and then a strong rejection? Only to get rejected again in the global economic shutdown in March of 2020. Well, looking at where we're at right now, let's go ahead and zoom in on these two time frames. So looking at where we're at right now, we're pushing up within these fib opportunity zone bands, coming right into this zone right here, this bull floor band, which could also be looked at as an accumulation ceiling. Okay, am I getting alerts? No. Okay, everything should be good. We're getting sort of accumulation sort of ceiling here. Are we going to get it rejected down? Are we going to break through this? And this level right here is roughly about $32,000. When we come over to the chart, let's come over to the BitLab chart, the Bitcoin chart. Let's come to the daily. Let's go ahead, turn off these moving averages. And what I want you to notice here, if we turn off all the drawings, we can zoom out here and we can turn off the indicators as well. And we can see that this zone right here that we're pushing our head up against is perfectly in line with where previous price action basically found a sort of a trappy floor. So the very bullish bias people were just accumulating here only to have this continue with the leg down, because we have to remember, once we enter into a downtrend, we tend to have this sort of structure, right? Whether it's up, down, whether it's down, up, or let me kind of zoom over here so we can see it more clearly, or even down like we saw, and then sideways, and then continuation down. Once we have established we are in a downtrend, we need to understand, we need to remember. And again, I just want to shout out again, since my screen was going in and out, make sure you come over here to the Academy BitLab, retweet this, you get entered to win. And what I was trying, oh, it's when my mouse goes onto this other screen. That's so bizarre. So now I know why it was doing that. Okay, well, we will figure that out in the future, but I'll just keep my mouse on this screen and we won't have that issue. So make sure you come and retweet this. Essentially, I'm going to make it do that again just for a second, just so you can see. And I'm going to add another option to this, and that is right here. These are some of the different prizes you can win. I'm going to add lifetime on here as well. And we're going to be picking that tomorrow, and we have a random day picker as well, which picks between Monday through Friday, and whichever one of those days is picked, we will randomly draw a name from all the people that retweet this tweet. Helps grow the community, also helps us give back to you all in a fair way. So now let's go ahead and break down some of the stuff going on in the market today. We had numbers come out. Well, first off, let's first talk about this. We had, everybody's seen the news. If you've looked at a computer in the last, in the last 24 hours, that essentially that the Bitcoin white paper appears to be hidden in every Mac computer running Mac OS Catalina or newer. And I've seen a number of people, this is not a spoof, I've seen a number of people go through a variety, their own system folders to find this process, and it absolutely is in there. Is this a move by Apple? Is this a move by an individual engineer, that almost like an Easter egg? I think it's probably more the latter than the former, meaning I think it's probably more of an engineer adding this in here. But this is massive. It also brings more awareness. It also brings just general a consistency of positive information that slowly builds that sort of foundation of not trust, but touch points. When we're talking about any product, and Bitcoin is not a product, but the way our minds work, we people that are not familiar with Bitcoin associate it that way. But in marketing, the studies show that people need to have, between 7 and 12 touch points minimum, meaning they've been shown, they've heard, they've become aware on a regular basis. If it's a brand new product or a brand new item or a brand new asset they've never heard of, the likelihood of somebody buying before those 7 to 12 touch points is slim to none, unless it is just an absolute, the perfect person for the perfect product. And the truth is, Bitcoin is the perfect solution in a lot of ways for a lot of the things going on with the financial system. But the difference is we have to contend with the cognitive dissonance and the mainstream media FUD campaigns and the big banking conglomerates and, the entrenched financial systems that the world and governments and fiat systems are just weighed down with. And through that, Bitcoin has to wade its way through that just sludge of just misinformation and just complete incomprehension of the possibilities that is in Bitcoin. So when we see stories like this, that it's a bit, the white paper is on every single Mac computer, this is positive news. This is just, I'm not expecting this to drive price up or cause any sort of fluctuations in price. And this is not why the headline today is huge move for Bitcoin and crypto incoming. In fact, we've got some incredible signals that are showing that a move is bound to happen very soon. Does that mean it's going to blast up and go to the moon? No, it does not. Does that mean it's going to break down and form new lows? No, we need to take this one step at a time. So we're going to break a bunch of charts down, as well as concepts, and talk about what's going on also with, this new The unemployment numbers, where is it at? Here we are. We've got unemployment change. I don't know why this was already preloaded, so let's go ahead and get it. There we go. So we have unemployment claims, which is something that Jerome Powell was also wanting to go up, so they can have this, so they can understand and have clear sort of data about what's happening and where they can project the economy's going. Are they tightening in the right ways? Now, on the one hand, this is bad. On the one hand, this leads, further feather in the cap for likely recession, which will more than likely bring markets lower, right? And with that, will that suppress the price of Bitcoin and crypto? Well, it very well may, but it doesn't have to. But this is just something we need to pay attention to. We need to pay attention to these macro numbers, these macro data points that the monetary policy economists, other market makers, other market participants are looking at, because we're forward looking in markets. We're not, of course, we look historically at trends so that we can get a clearer picture of a likelihood of things to happen, to give us statistics and probabilities of where markets will move. But based on the historical analysis, and when we see what has happened in recessions past, and when we see what happens when we get these sort of jobs numbers, we see the job numbers, the unemployment claims have gone up, and we can also see in direct relation, we see that the DXY, the dollar index, has made an attempt for a push up. Now, is this bullish or bearish for markets? This is what we want to know. Everything that happens in markets between different assets can have historical relevance in terms of a correlation, but it doesn't need to always be the case. The more often it is the correlated relationship is in place, then the stronger that probability is. And what I'm talking about right now is the dollar index. We have this long trend of this, basically parabolic sort of move by the dollar. As we came out of, let me move this, turn this off. As we came out of June 2021. Now, remember, this is March 2020, global economic shutdown. And then the dollar is falling. And then once, as the money printer starts just burring, starts just printing out, out the wazoo, then we start seeing the dollar go through the moon, while there's essentially there's a flight to the dollar. The money printing is not what made the dollar go up. The money printing and the lack of what was going on in the economy in terms of the economic shutdown, so supply, logistics issues, inflation, basically led to a flight from risk assets. And the flight from risk assets, meaning people closing positions, whether it be in, name the asset. We saw markets have, very choppy last 2 years. We see this have a strong correlation also. All of 2022, we had a very strong downtrend in markets, and we see this dollar index go to the upside. Now we're seeing this break down, and we see these. I have two different potential trend line supports, and then we also have this zone right here where we had this bounce, and we're testing this area right now. Not only are we testing it, let me go ahead and move this just a little bit. Not only is the dollar index testing this, but we've also broken through this, and this is what we want to see for risk assets. We want to see the dollar index come up like this, get rejected, maybe a little consolidation, and then break down. Essentially what I've drawn here, but on the smaller scale, we want to see this rejected here. If this finds support and the dollar index breaks back through this and continues to the upside, we can expect heavy bearish pressure or lack of bullish opportunity in especially traditional assets. So we want to pay close attention to this. So again, this channel is focused on helping you navigate the markets, helping you understand the concepts of what's going on between the correlation between traditional assets as well as Bitcoin and crypto, so that we can have trading strategies and plans and effective means of understanding what's going on so that we can make healthy decisions. So with that being said, again, if you haven't yet, hit that like button, join our community, hit that subscribe button, ding that bell. Now, continuing on, the reason I'm talking about, this is so funny how this does this. The reason I'm talking about the dollar index is because I care about what's happening with Bitcoin and the crypto ecosystem. So how are we going to tie this back together? Well, when we go back to what we were talking about before, the speculation about, okay, if we're forward looking in markets and we're trying to figure out, are we going to have a 2019 push up as we see here, or are we going to have this 2015 consolidation period that we essentially what we've already had here, and then have basically an attempt up, and then another sideways price action. This is what we're contending with right now. We have different examples of the way the cycles have played out in the past, and that's because market conditions always change, and we have to remember that. We can't look at 2015 cycle and because there's 2 or 3 similarities say this is how it's going to play out and then trade specifically on that. We want to look at historical correlations and how price action and patterns have played out, but we also need to look to key data points. Data is what gives you an edge in markets. Man, I got the hiccups today. So looking back over here, we're talking about this 2015 to 2019 comparison of coming out of a bear cycle. We see the price action, and here I'm here at looknode.com. They have a lot of free on-chain data metrics, and then this is in the market valuation, cycle valuation, come down to Bitcoin trend fib opportunity zone. We could see here that we basically capitulated right here at the FTX basically debacle, just absolute thievery that we see here. We go directly to the chart here, and we could see that when this happened, the price action, this is this jagged line here is a price action, came down and bounced right here on this line right here, and this line right there is the, what is it? It is the capitulation. No, it is, where is it at? The bear exhaustion buy zone. So once we got down to that, that means the price level got so far below the realized price that not only, I want to take off all these top zones, overheated, extreme rejection. We can see right here, the long-term holder realized price, which is right here, always marks healthy zones of accumulation in the macro trend. But an even more conservative area is when you get below the long-term holder realized price, meaning people that have held long, the stronger hands. This means the price action is below the strong hands average entry, which is why it's identified as a healthy, good spot for when you're trying to identify accumulation. And we can see that price action not only broke below this pink line, but also then capitulated, came down and hit this accumulation trend fib zone, the bear exhaustion or buy zone. Of course, we could have speculated it could have gone further down, which would have been like the generational buy, which we can see if I do like this, we could see right here the generational buy would have been about $12,900. We didn't get down that low. Will we still have a possibility to go down there? Maybe. I do think that the price has bottomed. So let's look at it in a different. This is the 2019. So here we see the price action was holding this basically capitulation zone right here. We see that was the floor. I mean, it was just holding this area. And as soon as we lost this zone, which is basically a fib multiple of the realized price, again, I'm trying to tie lessons in with the TA here. The realized price, for anybody, if you don't remember, if you haven't learned yet, the realized price is an excellent metric to really understand. I don't want to call it fair value, but it's essentially the average price of every Bitcoin in circulation the last time it was moved, the last time it was traded, okay? The last time it changed hands. So you're seeing the average price of every coin, both, for instance, if, and we can see if we zoom out here, let me go like this. If we see this, this line flashing, this realized price, and we can also come over here, go to look into Bitcoin. We come over here, there is where are we at? Realized price, boom. This is the line that that entire trend fib is based off of. This is the realized price. I'm coming here, and now you can see it. I got the chart up. We can see that as price action starts going up, what happens is the strength of the market leads smart investors bigger wallets, larger addresses, people that understand how to really navigate the market, they start taking profits on coins that they had bought at a lower rate, at a lower value. And then as they take profits into this area, it starts, significantly raising the average price. Whereas you have also, essentially coins being bought at these upper levels, and then there's basically not much movement as the realized price doesn't move that much here, because essentially all this is short-term holders capitulating between each other on the way down until you start getting a lot of the smart money buying again at these accumulation zones. And then as price starts moving up again, then all these coins that were bought down here, and also some that were even bought even earlier, start to sell into profit. Smart money sells into profit. They don't buy because there's a news media story. They don't buy because somebody else told them to, and they're excited because Bitcoin's at $64,000. This price action only got up here because somebody bought from somebody else who was selling, taking profits. That's what this stream is all about. That's what the BitLab Academy is all about. It's helping you understand these market dynamics so that you can make the smarter decisions. And even though it's so scary right here, you see below realized price, even though it's so scary right here, the smart money starts basically not exactly at the moment this capitulates, but you start seeing a lot of money start pouring in from long-term holders, and there's no more weakness in the market or very low weakness in the market because the short-term holders have capitulated all the way down. So this is what we're trying to contend with right now when we're looking at Bitcoin price. Are we going to get something like this as we've been in this accumulation zone where we're at on price, where we were at on price action following the FTX collapse? There's a lot of accumulation. Are we going to get that push up all the way up into this, this 41 to 42 or $48,000 zone? Are we going to get a slight push up as we already have, mind you, and basically chop in this region? Are we going to chop in this region, for a little while, 15 to 20% chops up until we get to the halving, and then the true bull market is unleashed? This is what we want to contend with. And depending on what your time horizon is, depending on what your plan is, if somebody is a day trader, if somebody is a day trader and they're discussing what their strategy is, and you have, a full-time job and a second job and kids and a wife or a husband and the dog you have to walk and, church group that you're going to, first off, you don't have the time to be a day trader. So you probably should, I don't want to say you probably should. It's a good idea to really identify what your time horizon is and what strategy works best for your lifestyle and for your experience level. If you're just getting into trading or you just bought your first Bitcoin a month ago, I highly recommend that you don't just jump into a 5-minute chart and start trading with, the entire $10,000 that you had saved that you put all into crypto, because now you're going to be rich and you're trading on a 15-minute chart, because that $10,000 is going to be gone in under a week. You need to understand you need to be true to yourself, understand what you know, understand what you don't know, be real with yourself. And come join us here in BitLab Academy, these daily streams. We have, free content all the time, as well as all the content coming to the actual BitLab Academy, but we'll talk about that a little later. I want to talk about how we can figure out what's going on with this market. Are we going to get something like this, which, in this case was let's go to the measurement tool. In this case was a, 350% move, or are we going to get something like this that was, let's go ahead and zoom in on this. Come on, VPVR. There we go. Something like this, which was roughly 100% move. You see that? And then after the 100% move, a 40% crash into a 46% pump into a 25% drop into a 19% pump. This right here, this is what destroys new traders. Up, people buy the top. Down, they capitulate. Smart money buys again. Up, retail buys the top. They're emotional. It drops again. They're scared because what they've seen in the past, so they capitulate. The price drops again. Smart money buys the dip. Goes up, retail buys the top. They capitulate. They have no money left, okay? smart money buys again. And then as this forms this trend, we can zoom out a little bit here. As this forms this trend, then maybe they're, working, and we've all done this, and it could be Bitcoin, could be some meme stock on Robinhood, could be even making decisions in life. And then we have to wait because we've exhausted our capital. And then what happens is it's like you see the price, you're kind of like you're sworn off because, this is not for me. But then you see price going up like this, and then it's broken this incredible level. And we get up to this $3,000 level. Previous high was $1,200. We get up to here, and then it's like, oh, maybe. And then finally, retail, these people that had sworn it off down here start buying these peaks again and just get eaten alive. And this is what I want to prevent every one of us on this channel from doing, even myself, because no matter how long anybody is in the market, you're still human, and you still have emotions, and you're reactive to the market if you don't allow yourself to stick to your strategy. So if you've ever lost money in the market, hit that subscribe button, because we're going to help you. We're going to help teach you how to prevent that from happening on a more consistent basis. We're going to teach you, we break down how we can figure out what's going on here. So now when we're going through some of the things that are going on in the news, okay, we see this Apple stuff, some positivity in the space, great. But as I was mentioning before, taking this back to that on-chain chart, the trend fib opportunity zone, this is something that's very important that we're looking at. I'm really looking at the $22,000 level. And I'm not saying that I think we're going to specifically go there, but as a bull, having a bullish bias as I do right now, the $22,000 level for me is very important. Now, of course, we're at the $27,000, $28,000 region as it stands right now. Where we at the moment? We're right at 27,946. Okay. Now, when we're looking at the chart like this, we're talking about the short-term holder cost basis. If you don't understand this chart, essentially what this is, remember we talked about, long-term holder, realized price and cost basis is essentially interchangeable. Same concept, same thing. I don't know why I have hiccups today. I think I drank my coffee too fast. Short-term holder cost basis is for the coins that are being basically the new coins being traded. So anytime there's a coin that's traded to when it's traded to, and I say I've held a coin for 10 years and I sell you that token, whether it's all of it, a percentage of it, 0.01, then that whatever size that a piece of that Bitcoin is now considered short-term held, because it's now being held under 155 days. And all the coins that are in these addresses that have just been transacted tend to have a higher ratio, much statistically higher relationship with capitulation or selling in the face of small volatility. So when price breaks above the realized price for short-term holders, we tend to be in a bull market. We see this price action right here breaks above this. You can barely see this green dotted line, but when we break above this, we see this large green period on the market, bull market. When we break below, we see these red bands break below, and this is marked a bear market. So when we come back to my chart here, this trend. This is why I identify it on this chart as a trend signal line. We see this red line turning on, off and on. This is essentially, when we zoom in to where we're at right now, we can see that we've broken above the short-term holder realized price. And back here, short-term holder realized price, which if I go like this, we can see this STHRP. That's what this acronym means. LTH is long-term holder, RP realized price. So back here, it was $17,816. But as the market is pushed up, and we can see that the market is pushed up and actually come back and tested this line right here. And we can see, this is the line I'm talking about right here. We can see the market has come back and tested this, which had a confluence of different price bands coming right through here. We had the short-term holder realized price, long-term holder realized price, and the realized price all cross at this juncture where the price action came down and tested this zone. So this was critical in this narrative for anybody that has a bullish bias. You have to also, even if you have a bearish bias, whatever your bias is, you need to look at it in both directions. So although I have a bullish bias, the first thing we're going to look at today is the potential of this price action rolling over, coming back here to the Bitcoin chart, the potential of this price action rolling over. And if it does, because as we just saw, I just pointed out with the 2015 cycle, that 100% push, 50% drop, 40% push, 30% drop, that is a lot of emotional volatility of the markets just eating retail traders alive. And if we don't have a plan, if we don't have data points to look at, rather than price being exciting, it's okay to be excited about price, only if you have the data to back up and the strategy to back up your ability and your courage. Sometimes it does take courage to, in the face of volatility, not capitulate because we get a wick down. I mean, even look right here. I mean, if we zoom in on this, let's come down to the 4-hour chart. We can see right here, we're having, this push up, this push into the zone, and then immediately on this push up, we get a 8% drop down, followed immediately by a, we could call it an 8% push back up. I mean, you've got to, in this part of the market, this part of the market cycle, which specifically is, and I've brought this up on the chart so many times. By the way, we are doing the Crypto Answered today, I think at 1:30 Eastern Standard Time, Eastern Daylight Time, here on my Twitter. Come to my Twitter, me and Crypto Vet. We also doing something with Presend co-founder Drew, I forget his last name, but we got, and Joey Hickson. We got some great stuff. We're talking about crypto markets and stuff on Twitter Spaces, so come check that out. But we're talking about this right here, the market cycles, this choppiness, this, when we're at this point of a potential new cycle, there's so much indecision, and it tends to be a shrinking of liquidity. So therefore the markets can be pushed around a lot easier from market makers, and then retail coming in, and then the market makers sending the price back down, and there's leverage, and there's so many things at play here. So this is why we need to have a plan. If you have a plan right now, I want you to let me know in chat. Do you have a plan? Put hashtag plan if you have a plan. If you don't have a plan right now and you're really just trying to figure out what the heck to do, you could put hashtag learning, and that's okay. It's okay to be honest with yourself. If you have a plan, but you're also trying new strategies, put hashtag strategies. Let me know in chat. Let me know down below. I'm really curious where you're all thinking. Now, it does look, for the Saturday stream, it looks like 61% of the people are same time, 10 a.m. So I will have it set for same time, 10 a.m. on Saturday stream. I got a great guest, great guest interview. I'm really looking forward to sharing it with you all. Now, looking at this, what do we see here? I want you to remember this. You can come to my Twitter, download this, take a screenshot, whatever you want. But what we're seeing here, and I've discussed this a lot, is these hype buyers with no conviction, and we see this rolling over. Now, what I want you to notice right now is there's a lot of charged tension within the financial ecosystem right now because of the uncertainty with banks. Because of the uncertainty with banks, there's, and where we're at within the 4-year cycle, and we can see right here, this is a past halving. This is the next, roughly around the next halving. Where we're at in the 4-year cycle, where we get a pre-halving pump, a little bit of a cool off or consolidation, sideways accumulation, and then we get the true bull market following the halving. Where we're at in this cycle, and people's awareness growing about how this market is working, and the uncertainty on banks, we're getting a lot of charged tension about what's happening right now. But we have to go back to our basics. We have to go back to the strategy and understanding some of the. Even before we're going to look at indicators right now, we're going to try to draw some conclusions based on some of the fundamentals that we see within the chart. So I want you to notice this right here. Notice this shape. We call this a rounding top. What this signifies is price action has strong bullish momentum. Okay, let's start it from here. Strong bullish momentum, cool off period. Strong bullish momentum, cool off period. Now we're getting less, see how much bullish momentum here? We're getting less bullish momentum here. Maybe that's a fluke. We get a little bit of a cool off. but then significantly less bullish momentum here. So now we're starting to see a change in dynamics between the bulls and the bears narrative. The bulls are losing steam. It's like if you sprint and then take 25 breaths, and then you sprint and you really need 50 breaths, but you only take 25 breaths of air. And now you don't have as much energy. And so you're starting to run out of energy until you pass out. That's what that's what this is. That's what a rounding top is. It's signifying a shift in momentum and a lack of conviction by the bulls. The bears are starting to, basically they're stretching. The bears are really getting ready to knock the bulls out. And you see that this is exactly what you see. And so there's a number of data points other than just the price action alone that can also give you some insight as to why. But first, let's start with price action. So let's look at Bitcoin right now. Let's look at Bitcoin. We're going to turn off all the indicators, all the drawings, turn off the VPVR. We're going to come out to the daily. Now, let's actually go to the 12-hour. So what do we see here? We see a strong push up, little cool off. Strong push up, and then it's a little, basically it's just rounding over, pull back. Strong push up, bears really make an attempt here, but this ends up being a bullish narrative because as hard as the bears took it, the bulls just said absolutely not and just rocketed to the upside. And there's a lot at play here because there's derivatives dynamics, people going heavy leverage in a certain direction, and then the market makers pushing them past their, basically getting people to go short and getting a lot of people to go short, and then market makers coming in and pushing price action above those levels of liquidity of where those stops are, where they have to buy. But if they're going short, if the price action comes back up a certain percentage level, and they can see this in the order books, they can see this in liquidity flow, then they can trigger all these shorts buying on leverage, mind you, whether it's 5x leverage, 20x, and very irresponsible 40x leverage. A lot of people that lose big in the markets, they get themselves underwater by they get too greedy by taking these high leverage positions. And this is a lot of shorts that then get short squeezed, and then you get a very quick movement to the upside like this. But what I'm focused on here is this structure right here. If we saw nothing else, this structure right here, we're seeing, what are we seeing? We're seeing this rounding area right here. Now, does this mean that we're going to break down because of previous price action? Not necessarily, but we've got to consider the possibilities of price action going in both directions. So in the last week or so, I have pointed out that there's basically a lot of upside targets, and there's a lot of, even yesterday's stream, a lot of bullish setups everywhere. So let's consider the psychology of the market and what the market is here for. The market is here, any market, whether it's stock market, crypto market, say you're walking through Morocco through the giant bazaar market trading place. Markets are designed for people to buy and sell goods. Now, the person buying is trying to buy. Buyers want to get the best price. Sellers want to sell at the highest price. So with these market dynamics in consideration, and we know that there's a lot less legality and legal structure around what takes place within the crypto ecosystem, as opposed to, for instance, traditional assets, stock markets, and stuff like that, and disclosures, and there's so much that goes in that goes into the crypto ecosystem. If there's bullish setups everywhere, as you know, if I pull this up right here, let's go to YouTube. If you haven't yet, come over to YouTube, which I know you're on because you're watching us right here. Come to the BitLab Academy page. If you're watching this over on Hit Network or whatever, come follow us. We're just shy of 6,000. Come give us a sub. Let's get over 6,000 this week. But yesterday's video, bull setups everywhere. Now, was I saying that absolutely we're going to moon? No, I was showing setups, and what we need to be aware of when we see something like this is, if there's people that are aware of all these, these technical analysis principles and chart formations and candle patterns and momentum, and there's all these bullish setups everywhere, especially when we're looking over here at the dominance, finding resistance, and the total market cap for altcoins breaking out. And there's a lot of bullish setups. And we've just discussed a few minutes ago, back in, coming back to whether it's 2019, giant push up, giant sell off. This volatility is making smart money millions and billions of dollars because they're buying here and they're offloading here, or they're buying here and being patient and adding to their position here and offloading here. How do we know this? How do I know this for certain? Because we can come over here to Glassnode. Actually, let's do it on Looknode, so it's free for you all. And we can come over here to favorites. We can look to long-term holder position change. This is a smarter minded investor. You see this giant dip right here in red? This giant dip is long-term holders reducing their position size, meaning they're selling out of their positions. Now, when do we see this red correlated? Perfectly with the giant peak in price. Now, right here, long-term holders got a little smarter because this was a bit quicker of a rally. We can see right here, this green wave is long-term holders accumulating into this basically sideways period. Through this volatility, they're accumulating position. They started accumulating all the way back here, and it just dominated this accumulation or distribution. The long-term holders were dominantly accumulating through this entire period. And then you see some profit. You see some profit taking on this push up, and then as it dips off, accumulation, and then as it as it's sort of pushing up here, a little more reduction, taking some profits. Now here we're getting a sideways action. There must be some other data metrics that were happening at the time as well, or maybe a new story. Strong accumulation. As soon as we get this push up right here, look, taking profits. Now we see essentially. Now I want you to see where my mouse is right here. This is a previous all-time high. Now, as you see this comes across right here, as soon as price reached previous all-time high, you see dominantly long-term holders taking profits into the strength of this bull trend. So the reason why we need to be aware of this is as what's going on with the bullish setups everywhere, as well as market dynamics from 2015 and 2019 being pre-having periods in the market, is if we're starting to understand that there's signals and data points that we can use beyond just looking at the price, not price action, just looking at the price, being excited. We're so excited. It's back at 30,000, and we can see this because look at this. Look at short-term holder supply. This is we can see it, starting to, short-term holders are starting to buy into this rally. We can see short-term holder net position change. We can see them adding to their positions into the strength. Actually, I wanted to see, I think it's this one. Yeah, look at this. A lot of short-term holders are buying into this rally. So what are long-term holders doing? This is a long-term holder position change. Long-term holder position change, reducing their positions. So this brings me to the contentious point of, I don't call it market manipulation, of the markets moving in ways for the smartest money to make the most, the people with the best strategies to make the most money, and those with no strategy or trading emotionally to be eaten alive by the volatility that's coming. And so why are we bringing this up today? Why is the title of today's show, Huge Move for Bitcoin and Crypto Markets? Exclamation point, question mark. Well, there's data that is showing, there's technical indicators that is showing that a big move is absolutely on the horizon. Not only technical indicators, we're seeing this rounding top. What happened with this rounding top? Large sell-off. People that capitulated here only are, a lot of them, rebuying up here. But we're at macro support, now macro resistance, and we're seeing a cool-off period here. But most importantly, let's go ahead and delete this line. Most importantly, let's come down to the 12-hour. We see this rounding top, but we also see a bit of a bull flag and an indecision. So what do we do? Well, let's go through some. We're going to go through sort of a mix of different indicators here. And first thing I want to show is If we come to the daily, look at these Bollinger Bands. I'm going to mute the moving averages right now. Bollinger Bands, basic, really quick lesson for everybody. Bollinger Bands created by, I think his name's John Bollinger. Would make sense, Bollinger Bands. Basically shows you have a 20 simple moving average that's a part of the Bollinger Bands. And then you have these two bands, upper and lower bands. And they essentially look at the last 20 period, meaning if you're on the daily chart, the last 20 days. If you're on the hour chart, the last 20 hours. If you're on the the month chart, the last 20 months. So whatever period, whatever time frame you're looking at, the last 20 period. And where 95% of the price action was, or 2 standard deviations of the 20 simple moving average. And so you can see when price action is, you see how this constricts right here, these 2 bands? This is showing that the volatility on average over the last 20 period is starting, the volatility is compressing down and down and down and down. Now, what we have in all markets is we have a cycle. We have a cycle of price action going up and down, but we also have a cycle of volatility going up and down and up and down. And those 2 things work together. And also everything within the markets is cyclical. So what we can see is when we get large periods of expansion, which is right here where the Bollinger Bands, where the price action breaks down, as the price action breaks down very far outside of this band, we see the bands expanding on both sides, because now it's showing that the likely essentially as this tightened, as the volatility contracts here and things accumulate, the tighter this gets, the more explosive the volatility will be. And we can see right here again, large move and then sideways consolidation. So very, very quickly, we see these bands contract and then they get very tight, and look at this giant move to the upside. Now, similarly, here on the daily, we had this, I mean, very, very wide portion right here. And as we consolidate sideways, this tightens down. And this has kind of been very choppy here, but then we get this large move to the upside and then just very tight range in price, meaning there's not a lot of price action movement. There's not a lot of price action movement across the last 20 days. So the average, as these days drop off, because say if we're measuring from here to here, then every day that we go further, we're dropping off 1 candle, right? So say like right here, we're including all of this, this choppiness. But as this gets to over here, we're dropping off a lot of this volatility, and we're seeing these Bollinger Bands contract. And so not only are we contracting, price action is contracting and now holding on the 20 simple moving average, which is looking to be like, is every time we lose this area, the 20 simple moving average, we're coming down to retest this, at least test the lower band, if not break through it. Right here, lose the 20 simple moving average. Not only did we test this lower band, I mean, really expanded the volatility here. So volatility is looking like it's setting up. Now, another way to look at this is we can use, this is another look at the Bollinger Bands. This is called the BBWP. This is, you can just search up here. You can type in BBWP, or you can type in Bollinger Band width percentile. And this is essentially showing you the oscillation, that cycle that I was just talking about, the cycle of volatility. And this is measuring the Bollinger Band width and the cycle that's happening. So rather than looking at the Bollinger Bands on price action, we can see that. Let's go ahead and mark some of these. Option V. We're just going to see if there's any correlation between this Bollinger Band width percentile coming down in this low zone. We're going to see if there's any correlation in price action. There may or may not be. Let's go. We're going to see where we're at all the way down here. So yeah, let's do here. Some of these might line up. Some of these might line up. Some of these might not. This is how you can kind of do historical analysis on an indicator as well, is rather than look at an indicator with price action, mark out certain things an indicator's doing, so you're not having a price action bias, and then come out of here and see what happens with price action. So the Bollinger Band width percentile was low here, but this actually still dropped. So, okay, we have one hit against us. Right here, we had a very long period of accumulation and a strong move to the upside. Here, sometimes these things don't look as strong, but when you zoom in on them, it's, we had a move we had a 13% move to the upside. Okay. Here, look at this. Bollinger Band width percentile very tight. The accumulation range was shrinking. Strong impact to the upside. Now, we could also go back, into, let's look more realistically, or something that could be, and in the start of a bull run back here in 2019, we had the strong accumulation zone. We broke out. So let's look at it in these sort of zones here. So each time this came down, we had a push up. This right here came down, option V, push up. So we are seeing that when we get these volatile movements, they tend to be after the accumulation phases or consolidation periods. Let's go ahead and delete some of these. Have periods of where price action isn't being very volatile. While it may be boring, in reality, somebody that understands markets, and that is going to be you if it's not already, is you see a boring range forming is hinting at an excitement or volatile movements coming in the market. Now, there's two things that can happen here. I mean, there's many things, but there's two things I'm really going to focus on here. Let's say we got 188 people in the chat right now. We only have 95 likes. It's all showing me. It might be higher. Sometimes it's delayed on here. Hit that like button, hit that subscribe button, ding that bell, get a part of our community, get in chat. Let us know where you're from, where you tuned in from. And you know what? I didn't shout out the chat earlier. So just for a brief second, I want to shout out. I want to shout out some of the people here in chat. Mr. Matt C, glad to have you back. Unforgettable name. Also helping with some of the things we're doing in the BitLab Academy. And I appreciate your help. Thank you very much for that. Crypto Wiki, it's going to be awesome within the BitLab Academy. Alexandra G, special shout out to you. You do so much for us here in the community. Brad Guidel, Jeanette, Taz Goggs. We got, I don't know if Alex Green is in today because I know he's got some family stuff he's doing this weekend. A mellow fellow, Karen Swigart Harris, always in the house. Gia S, shout out to you. Tenacious B. We got, just really, I appreciate everybody in the room. Hit that like button, hit that subscribe button, ding that bell. If this is your first time, I appreciate you being here. My name's Kelly Kellam, and my only goal here is to help you not fall into some of the pitfalls I fell in years ago when I started in crypto, and be able to expand your portfolio because you can navigate this market. So let's continue doing that. Jump in here on the screen. We're talking about a combination between using price action, which is showing us that we are rolling over. Okay. We do have dominance that is, it looked like it was trying to break out to the downside. But one of the things that's happening so regularly in the crypto ecosystem, a bit more often than these large market cap, these huge liquidity, huge liquid assets, or assets that have huge market caps like Amazon and Tesla and NASDAQ. Crypto has so much smaller market caps that although a structure might say, and I'm alluding back to the stream we did yesterday, the bullish setups everywhere, is if there's bullish setups everywhere and the market is very volatile right now and there's uncertainty within the banking system, then there very well could be, just like this. Let me go ahead and come back over here, double click on the screen. We see this price action push up, traps people, sell off, push up, traps people, gets people committed to go to the short, and then explodes to the upside. Now we also are above this trend line, but there's so much uncertainty. So either way this goes, I'm acting with other than the coins, other than the coins that I bought in this region down here, because there are some that I'm trading at trading basically in these regions at different points when markets had pulled back. I'm trading very, very conservatively right now because either way this goes, this very well could get a wick to the downside and then moonshot. This very well could, I mean it. Come here and push up, get a lot of people excited, then come down, get people committed low, and then continue up. Or there's so much that can happen right now. So if you did not take advantage of these very healthy accumulation zones, then where we're at right now, for me, this is not financial advice. I would wait for clarity of direction because we're sitting on key resistance from massive support over the course of, okay. I hate the paintbrush on TradingView. So here we go. This is basically 548 days of support at this 551 days. And now we're only touching this for the first time. Well, we very may well get rejected here and come down and, you know, really shake people out. Now, what I would recommend looking at is if we are having the technical, looking at just price action alone, we are seeing a bit of weakness because of this rounding top. Now, in addition to the rounding top, what did we just point out a little bit ago? Coming over here to look node, we see the long-term holder position change. They have been reducing positions into this area while the short-term holder position change, AKA weakness coming into the market, this causes me to pause a little bit about what's going to happen in the market. Because if weak holders are coming in and strong hands have been taking profits, then what I think is likely is, looking at the price action right here, is coming down. If essentially, let's go ahead and delete this. Coming down very quickly, coming down very quickly and testing an area below this trend line to really get people committed to going short, to act as a springboard to the upside, to get rejected, and then have like a consolidation continuation. That's what I think is most likely. However, there's such a mixed mash of news going on with everything in the markets that, you know, as I just mentioned yesterday, bullish setups everywhere. I think because of that, there's going to be a shakeout because so many people are looking at the bullish narrative. But I do think that the shakeout will end up being a bullish springboard for the next move. The other option is for price action to push up, basically push up to these levels, commit more people to going long, also leverage, and then shake those people out to the downside, only to then consolidate and then move to the upside. Those are the two main scenarios I'm looking at. So let's look at the technical indicators other than just the price action and what's going on. So we saw that Bollinger Band, BBWP, sort of very contracted, looking like there's going to be a big move. So what do the technical indicators say? Well, let's come first to BitLab Trading Stack. Let's turn off these moving averages. Now, we're seeing, we're looking at the daily here to start. We see a neutral zone here on the BitLab significant movement. Dropping things here. Hold on 1 second. We see the gray area right in this region. This is an aggregate of a bunch of different momentum indicators. And when things are showing like stochastics and MACD and there's a number of different indicators. I don't want to list them all because we don't want it to be recreated. But and it's aggregating when you're getting likely trend floors, when this is blue, likely trend tops, or overheated movement, overbought when it's red. And we're great. We're very neutral right now. This is on the daily. We do have, it looks like we have two different bullish divergences. Now, if we come down to, let's look at a little bit smaller time frame. We're sitting right on a bit of a volume node there. Let's come down to the 4-hour period. We can see, look at this choppiness, gray, blue, red. So there's a shift in trend here, but we're also looking like we're in, on the 4-hour period, a little bit of a falling wedge. But in a way, I'm not trading this as a significant signal, although this is a bullish chart formation. We see in this case, this was a falling wedge. It did break out to the upside, only to essentially almost basically Bart Simpson up, Bart Hare, break back down. So are we going to get something like that? Is this just a continuation of this bullish bearish choppiness? Let me go ahead and minimize this so we can have a bigger screen. Well, what I am seeing right now, as we're breaking down in this falling wedge, we are getting the relative extrema sticking out to the downside, showing that the bearish movements are sort of out of context, unhealthy. There's underlying bullishness coming in. And then we see this with this hammer candle, semi-doji, reversal sort of candle, indecision candle. Now let's get better resolution. I'm on a 4-hour. We were on the daily. So we're looking at the daily here, right? So this is that falling wedge, right? So we can get better resolution of what's happening within this falling wedge by coming to the 4-hour. See? And we can get higher resolution by going down to the 1 hour. And we can see that on the 1 hour, it's looking like, let me come up here. It's looking like on the 1 hour that, that we may be attempting a breakout of this, but I'm not gonna immediately trade this, that we're going from this zone all the way back up to the 28.7, 28.8 region. Why? Because look at that. There's so much indecision in this market right now that if you're trying to figure out the next entry point for the next move, the next leg, well, let's come to auto. We could see that it hasn't worked out well for buying a top here because it dropped back down. It hadn't worked out well for buying a top here because it dropped back down. We're in the same situation right here. So I'm not saying that it's not still a good opportunity. Again, this goes back to whether or not you understand what your time horizon is and what strategy you're trying to deploy. So if you're looking to buy to be, and you're holding it to 2025, then anywhere in this entire region is a good buy. Anywhere in this entire region. If you're DCAing for, basically from now until, through the halving, which some people's strategy, because they don't want to sit at a desk on a regular basis and look at charts or tune into these different YouTube streams or educate themselves, then that's okay. But if your strategy is to swing trade this, then a swing trader's opportunity here, just by dynamic of price action and momentum, would be not to buy the top here. It would be to buy the breakout of this if there's a retest, because there's so much uncertainty in the market. So although we are showing on the daily bullish divergences coming down to, let's say, the 2 hour, we are breaking out. We are breaking out of this. We got the bullish divergences. We got bullish. We had a bullish, what do we call it? A bullish divergence on the volume, which is one of the strongest things, one of the things that I like the most in this, because volume shows you where there's interest. If there's an increase of volume coming into a level that, and the price is falling, you get a lot of understanding of where there's interest in price levels in the market. And so what we need to do is we have a trading range. I'm going to pull it up over here. Let's see. Let's go to one of my boys, Mr. Caleb Franz. Okay, I can type. Believe me, I can type. He outlined this very, very clearly, and that is, where is this one? Here we go. Nope, that's not it. That is it. But this is the 30-minute. This is a range that we're trading in. And we're basically oscillating in this range. We want to take note of this range so that we can identify what our action plan, what our strategy is. So if we come over to another chart, let's go to, I have where's my Kraken chart? Kraken. Here we are. So we're also, turn off everything, turn off the lights. Okay, we can see that we're kind of coming into some different ranges here, but we're basically essentially going through this option J that gives you these horizontal. We're essentially just in this trading range right now. And until we break really above this region right here, which is 29,000 to 29,300, then we haven't done anything different. Even if we come up here, a lot of people, as soon as we break out of this downtrend resistance we have right here, if we break out of that, a lot of people are they're gonna trade it ineffectively, because they're gonna buy this hoping it's gonna go all the way to new all-time highs, only to have it come up right here and have it reject back down. So This is why I'm saying you need to understand your time horizon, because an effective trader, a range trader, or a scalper can trade this and trade it very effectively with their target essentially being, okay, we're breaking out of this, we're trading, taking some profits along the way, and then, and then also exiting the position at this, only to look at what the next strategy is. If this does just with full momentum break through this, then you have another strategy in place. But if your strategy is very small time frame and you're trading this, in this case, we're on the 2 hour, then we can see, I want you to notice something here. We can see a regularity of pattern, the time taken for patterns to play out. So we can see this breakdown to bottom here was about 1 day, 4 hours. Okay. Now this here to the top was about 1 day, 8 hours. So if this breaks out, very likely we can go to about 1 day, 4 hours. It might be about 1 day, 8 hours for this to make that move back to the upside. It might be quicker, but you need to understand that when you take this trade, one, you have option F from the top to the bottom. You've got some points you need to look at. You take this trade and this would be the scalp trading style. Trying to trade this breakout to take advantage of this move right here. Take advantage of this move right here up to this. That's a 3% move. So for scalp traders and people that are trading regularly throughout the day and they're making a living trading, they're not swinging for 40 or 80% profits in every trade. What they're doing is they're trying to take advantage of the volatility and price action and movements, and seeing when they have an established range, when they have an established framework that they can look at and say, okay, well, if this breaks out, and we can actually do this trend line a little bit better because this is looking like more, let's go down to the 1 hour. Yeah, so there it is. So it looks like we are breaking out of this, but what you do on this entry is, and we've talked about this, long position, you have your breakout, and you have your stop below your previous low, this is a previous low right here. And then you ladder your exits from, essentially you could take some profits off the table at the golden pocket, which has a very regular hit rate of price action rejecting on if there's going to be a bearish narrative. For instance, if this is going to retrace and this is going to be a continuation down, price action will trap people by coming up to this golden pocket, then reverse down. If this is going to continue to the upside, then this will come up to this area right here and either blast through it or more likely have some people take some profits, because people are aware of these strategies, have people take some profits and then have a little bit of a pullback and continuation to the upside. So you ladder your areas that you're taking profits out a little bit here, say 15 to 20% profits here, but also at that point, when that happens, then you move up your stop loss. You move your stop loss up to, so now here, you see this previous top right here? I would move my stop loss to just below this previous top, because price action will likely, if it's going to pull back and then continue, for instance, pull up, it pushes up to here, has a little pull back, likely to this candle bodies right here. So your stop is just below that, but it's out while moving your stops up so you can be in profit and taking advantage of these moves. So buffering, is this buffering for other people as well? Let's go ahead and go out of the chart for a second. Let's talk to the chat. I want you all to let me know. It says excellent connection on my end. We got 250 viewers, 134 likes. I want you all to let me know. Alexander G, I know Alex isn't here today. I want to shout out to anybody that's new in chat. Anybody that's new, if this is your first time here, hit that like button, hit that subscribe button, join our community. We got a great, empowering, wonderful community of people all the way across the board, from very beginner to absolute pros in the space that are on this stream. So get engaged in the community, share your thoughts, what's up. But I want to see some questions. Everybody, throw in some questions in the chat, and I will try to answer some. And we're going to do some TA on some other coins as well. So as I'm waiting on your questions to sort of populate here in chat, and if you're watching this later, drop your questions or your comments down below this video. We do go through them. I want to really see what you guys are thinking or feeling. So as this is setting up right now, let's go ahead and go back into the screen. And I want to look at what's going on with some of the other coins. We got Cardano. We're going to do some quick run-throughs real quick. Cardano, we're going to turn off the indicators. Cardano running through, basically still oscillating through this channel. But as we see, it's losing a little bit of steam, but it's finding some support here on this. Let's see, option F, bottom to top. Finding some support on the 382. That's nice. A high volume node. What's going to happen here? We got a blue wave coming in. We're on the 2 hour. Let's go to the 4 hour. We got a blue wave forming here. Relative extremist sticking out. So maybe some bullishness is forming for Cardano. We have a MACD bullish divergence. I mean, again, everything right now is just on a knife's hair, you know, especially when we think about, you know, coming back over to the news, you know, this, what was it? Dubai, Binance. We have this, I still want to see clarity on this. Binance under pressure as Dubai demands additional information about crypto license. You know, there's also a lot of regulatory scrutiny right now going on with Binance and CZ and the connections with China. There's a lot of stuff that's right on the knife's edge right now in terms of certainty in the markets and market movement. So because of this contracting volatility that we've seen, and remember, we brought this up when we were looking here, coming back right over here, looking at the BBWP, the constriction down here with the Bollinger Band width, you know, look how tight this is. We come back to the daily. There's going to be a big move. And I think either direction it moves, we are going to see, if we come over here to CoinGlass free website, you can use this website to look into open interest, funding rates. And right, for instance, right now, we can look at funding rates on here. This is basically a trade metric analysis. I cannot talk today. All right, so we're seeing that this is still positive. So why is this important? Why do we care about this? Let's go back on 1 day. Okay, so we have positive. Actually, let's come over here. Let's look on Look Node as well. We can see funding rates, average funding rate. So what we can see right here is the fact that, just want to see, make sure everything's good. Positive funding rates means that it costs money. Positive funding rates has to do with all the people that are out there, leverage trading, derivatives trading, options, all this sort of stuff. When it's positive, this means more people are going long. Market tends to upset the most people. You see right here, FTX collapse, everybody went short. So it was very expensive to do, if the majority of people are taking shorts, then there is a negative funding rate. And so therefore all those people are paying the funding rate for basically paying for the people that are going long. That helps balance the market. It helps balance what's happening within the options market. So you can't just have runaway everybody going long and it doesn't cost any money. So what we're seeing right here, okay, everybody goes short and then the market goes up. Now everybody's going long. Market it sort of cools off here, and as we're seeing a little bit of choppiness here, but I don't know how. Let's see, as recent as this is. Let's see here. We are getting a little bit of a negative funding rate, a little bit of an aggregate negative funding rate, but we want to pay attention to this. Now we come back over here to long versus short ratio. We can see, and these are free tools, looknode.com, coinglass.com. We can come not to 5 minute. Got to make sure you come over here 24 hour. And we can see right here that the majority are on the short side. You see what I'm talking about? Right? No, sorry. Right here, short takers, taker sales, puts, 51%. So the majority of the market has gone short. And now it's not a huge, significant number, but when you start getting heavily short, then you need to pay attention to what's happening with market movements, because in this regard, the market could move down very rapidly as longs, all those people that, you know, all the people that have been looking at this market, been very excited buying. Yeah, we're going up. All these longs, as price moves down and we're starting to see a lot of people go short, then the longs that are in the market can get liquidated and we get a fast move down only to slingshot back up. So we need to pay attention to this. We need to pay attention to these different metrics. Now, coming back out, let's look at some of the other coins we've been looking at recently. Algorand. Okay, Algorand just looking sloppy. It's just looking choppy. It's just following the lead of what's going on with the rest of the market. AVAX is looking, Avalanche is still looking pretty healthy. This is on the 2 hour. Let's look on the daily. I mean, it's trying to break out of this downtrend resistance. It is just fighting to. We are looking overheated though. This is on the daily. We're getting a bit of the red flash here. Now coming down to the 8 hour, we're getting the red flash and 4 bearish divergences, but we did come down and retest. And then we're trying to get this a continuation to the upside. So there's just a lot of noise in the markets right now. Let's look at Ethereum. We gotta look at the big girl here, Ethereum. Where are we at? Here we are, ETH. I have a chart somewhere. Guess not. So 3 days. Let's look at this. So boom, option T. We got to get our line coming out here. We broke out of this downtrend line. Okay, now coming down to the 8 hour, 4 hours actually. Let's look at the 4 hour. So this, I can already tell you, this looks like a rising wedge, which is potentially not what we really want to see right now for Ethereum, especially coming into the Shanghai upgrade. But this could be one of those shakeout factors. Bearish setup for price action. It's pushing up into the Shanghai upgrade. Maybe fake out to the upside, come down, retest this, and then shoot to the moon. So you want to have a strategy in place because the market is bound to shake you out. Even in the opposite case of this is a bearish structure. So more than likely, it very well could break down. It's going to commit a lot of people that don't understand technical analysis and chart formations, that then they commit going down and then just rock us to the upside. So we are in the phase in the market that the market is going to shake as many people out as possible. So have your strategy. Let's continue on. Let's look at Atom. Atom looking like it's forming a bit of a triangle right here. Option T. The reason I look like this is because my mic's right here. I can't see my keyboard. I use my keyboard to do my quick keys here. If you don't use quick keys, I don't know what you're doing. It's such a pain in the butt to come over here and pick your tools every time. If you haven't yet, come over to the BitLab Academy page, youtube.com/@BitLab Academy. Come to playlist. Come down to view full playlist for daily alpha. Come to pro trading view guide. I go through a lot of different quick keys, tips and tricks to really master and quickly be able to do TA on the fly without having to go and find tools and stuff. So now we can do our fib option F or alt F if you're on PC down to this low here. We can see that we pushed up weekly into this 382. So if we are able to break out of this, we still have a lot of headroom to work with above us. But we're also seeing more bearish divs on the volume. So bearish interest dominating this sort of narrative, and overheated here on the BitLab significant movement trading stack indicator down here. So we want to be very careful on this. Now, this is a rising wedge as well, very kind of weak depending on what angle you're looking at it at. So I do think that there's likely a little bit of a washout to the downside in the cards before we have a continuation of the upside, but you never know. I mean, we see this news that we just came out with Apple having the white paper on every Mac computer since Catalina. I mean, we're getting all kinds of stuff coming out right now. Now, is there anything else that I wanted to share? And there's a couple. Gala was setting up very nicely yesterday. This is not the chart I wanted to show, but let's see. Here we are. So we see that this is just continues trying to break out. It's getting failing. So now we're getting another trend line on Gala. Kind of move out of the way. There we go. We're getting a bit of a, yeah, it's just not pretty. Because everything's consolidating while we're waiting for a direction and trend. Now, also, we did see this fake out from the Bitcoin dominance come down to the 4 hour auto. we could see that we had it's essentially this bull flag that was forming that turned into a channel. And we could see that this did break out to the downside. Is Bitcoin about to have another move, only to then get rejected, and then we get that large move within the alts? These are all the things we need to take into consideration. We're getting a lot of, on the signals here, we're getting a lot of dominating bearishness here. So this is a dominance chart, by the way. So this is showing if liquidity is going to primarily be flowing into Bitcoin or primarily be flowing into altcoins. So we've got a lot on the plate right now. So I want you to practice healthy risk management on all the trades that you do and understand what your strategy is and what your time horizon is. Now, I did see a question here. Alexander G threw in here. It said, okay, two questions. What are your thoughts on BRICS? Well, we've talked about this a lot on the show the last couple week or two, especially when we talk about what's happening. This is important, especially the liquidity flow in not only traditional assets, but Bitcoin and crypto. We're seeing a pivot out of the US dollar. We're seeing nations opt to transact in oil. Saudi Arabia, the BRICS countries, Russia, Chinese yuan being very prevalent in a lot of the trading that's happening of goods globally right now. And they're even talking about setting up a different currency. Now, with all this being said, and we're seeing the dollar sort of, the holdings of the US dollar also drop on global treasuries, meaning different nation states are reducing their balance sheets of what they're holding in US dollar. Not only is it happening on pivoting out of using the US dollar to transact, so the US dollar as reserve currency is essentially right now in transition out of becoming the world reserve currency. Is this going to happen in the next 2 years? No, it's not. This is going to be something that's probably going to play out over, the next 5 to 25 years. And we can see one of the things that's important. I'm going to pull this up as I'm talking about it. World reserve currency timelines. Now here we go. We can see that since 1450, there have been 6 major world reserve currencies. Portugal was 1450 to 1530, which is, about 80 years. Spain, which was 1530 to 1640, which was 110 years. Netherlands, 1640 to 1720. So roughly about the same amount of time frames, you see? And so now, where are we at? I mean, look at this, 1720 to 1815, about 100 years. Great Britain, 1815 to 1920, about 100 years. 1920, what year is it today? It is April 6th, 2023, Yana. And I got to say, as much as, as a U.S. citizen, I don't want the world reserve currency to change because of I guess my upbringing and cultural nationalism and all this. But as a human, things change and dynamics change and the market changes. So we need to pay attention to what's happening to all these market changes, because as they do play out, we can utilize the change in volatility. And we can also understand that if the dollar is dropping, the value of the dollar is dropping, as a humanitarian, that means that things are things are getting better and less expensive in other parts of the world. So in reality, things are going to basically, MDX, another crypto YouTuber, we've done some spaces and podcasts together. It may suck a little bit for the US as this happens, but maybe the rest of the world gets a little bit better because the trade benefits it's no longer just purely in favor of the US. And we can utilize this if we understand market dynamics to also know that Bitcoin is essentially a government agnostic asset. It's not held to any. What are we calling it? Nation state, any sole, government, or it's for you, it's for me, it's for anybody that wants to own their own assets. You look at I think it was 1921, when they started confiscating people's gold, and you had to turn it in and you trade it in for paper money. That's essentially the next phase of what's likely to happen in the U.S. Is CBDCs, not only the U.S. but the global systems. because it gives them more control over their ability to see what's being spent by who, where, attribute, we see what's happening in China. And I don't want to go all conspiracy theories on us, but if we focus specifically just on Bitcoin alone and look at the ability that it is a decentralized network that is secured and utilized internationally in a decentralized manner that cannot be inflated, that has there's a programmed inflation amount. There is inflation of, right now at 6.25 or 6.125, whatever. That's the minor rewards. Technically that is inflation, but it is gone up and had corrections. Am I getting some issues? Buffering. I guess there was some issue with the buffering. I apologize about that. Well, we could see that over the, since the life of Bitcoin, we're having push-ups and pullbacks and push-ups and pullbacks. And while people get frustrated in these accumulation zones, very frustrated in these accumulation zones, if you stop getting excited by news stories when price action goes high and start getting excited by the data, come and explore Looknode, go and explore lookintobitcoin.com. Learn about technical analysis, price action, market dynamics, market cycles, so you can identify that when price falls, it doesn't mean it's a bad asset. It means speculators are driving the price of the value down, and smart investors are taking advantage of, it may not be whatever asset you want to look at. Traditionally with stocks and traditional assets, you can see speculators' flight from an asset. Basically price going down. But if there's just, P&Ls or, market news that comes out of huge explosion of growth and dynamics and income of that company, and then the market price shoots back up with Bitcoin and crypto, you can utilize on-chain data. You can look at all of this stuff. Come over to Glassnode. Look at this. Addresses. If this doesn't make you bullish, I don't know what would. Let's zoom out here. All of total addresses. This is, if you are looking at traditional assets, you say, okay, do I want to invest in something that has a growing user base? And you look at this and you say, okay, even though price is falling, it's going up. Even though price is falling, this is going up. And not only is it going up, the total addresses is going parabolic. This is price is falling, total address is going up. You can also see this with new addresses. New addresses will be a little bit different because there's a decrease in this doesn't mean there's a decrease in the total number of addresses. This means all of a sudden there's a slowdown of new addresses being created. But we're seeing this trend up over time. Even all of 2022, we saw a little bit of reduction in new addresses. And then right about here, markets starting to get smarter. People are starting to get more aware. And when we get down to these accumulation zones, we see a sharp increase in new wallet addresses. We can come down here to, let's go over to Looknode. Let's go up. Let's go to favorites. Let's go down to realized. What am I looking for? MVRVZ score. We see that we've been in a healthy accumulation zone. We're going to have some chop. But even if you feel like you made a stupid decision and the market goes opposite direction, don't capitulate out because the market moves that direction. If you're going to capitulate out because you had a plan to. Now, none of this is financial advice. I'm just trying to encourage you to use strategy and don't let your emotion or fear shake you out of the market when we're setting up. Even here, if you bought and then it goes up and then it comes down, you don't sell because it starts coming down. You look at the market dynamics of a 4-year cycle and you go, oh, what is likely to happen? What works? You have to think for yourself. What works for me and my risk tolerance and my stress level and my expectation of when I need this capital? If you're trying to flip your rent money, that's not what you should be doing. If you have extra money you've saved on the side and you've set aside for investing or trading, then maybe it's something, but you have to come up with the strategy yourself. None of us that are on YouTube are financial advisors. I'm sharing my strategies that have worked for me to back in, let's see, let's zoom out here a bit. Back in this time frame here, spot trading, making great money. And then I turned on just some very stupid decisions and lost a lot of money back here. Lost more money than I had ever had before that in my life. And then I reassessed myself. I reassessed my strategy. I reassessed what my risk management was, what my time horizon was. And everything changed after that. One, I had to learn patience. Two, I had to remember that I learned patience and really harness that patience. And three, you always have to ask yourself, what is my strategy? What is my plan? What are my targets? And before I pull this trigger, is there agreement with multiple data points that suggest that this movement is going to happen? Is this movement going to be highly probable? And even in case, even if it feels like it's a 90% probability, what is my risk management? You don't have those things, then you don't take the trade. And in reality, I would suggest for most people, the smarter opportunity is not trying to range trade stuff, but try to find good opportunities to get in the low part of the macro cycle, and then just take profits along the way as it pushes up. With that, I hope you all have a wonderful day. Hit that like button, hit that subscribe button, ding the bell. I appreciate you all. It is Thursday, April 6th, and it doesn't matter. This content is meant to be viewed anytime. I want to make sure that before you go, you come over here to the BitLab Academy page, retweet this tweet. Even if you're watching later tonight or on Friday, tomorrow, I'll do one more of these for tomorrow's stream. And at the end of the stream, we're going to be picking from all the people that retweet any of the daily streams this week. So you have an opportunity to win from the indicators, the courses. We got all kind of stuff. This stuff is coming. You see new website and new content launching in a matter of days. I'm actually going back to Atlanta to pull the trigger on all this. And I'm so excited. Shout out to David, Ray, Craig, Frankie Candles, BitBoy, TJ, Steven, the entire Hit Network that has been such a big help. And also Bobby there at Hit Network as well. There's so much that went into, it wasn't just filming some new courses. It was filming, editing, graphics, new content, new website, new course structure, the new course management. So come over. I do recommend it's going to roll over on the same website, bitlabacademy.com. I do recommend that you come and sign up for the newsletter here. You also get entered to win some stuff. The indicators are right here at indicators if you want to get that. But, you know, when you see this new website come live, the prices for BitLab Academy, it's still going to be very affordable, but they are going up because we are offering a lot more stuff. And also get in the Discord. Big love to everybody. I hope you have a wonderful day. And I will see you in the next episode. Adios, muchachos. Thank you for coming. Thank you for tuning in. Hit that like button. Ding that bell. How dare you ding that bell?